Hey everybody, it's Blake here with Trade Tracer. Make sure you go ahead and hit that like and subscribe in the bottom right if you find this content valuable. Click in the description for some free signals and follow on Twitter as well. Okay, as always, none of this is financial advice. Always trade and invest at your own risk. So let's go ahead and start with the SPY. I have it pulled up here on a daily time frame. What happened here? We closed on Friday in what I classify as no trend. Okay, so we have a close below the 10 period moving average. This was a 12-day uptrend that paid us very, very nicely. If you're a premium member, almost every single trade from the premium traders daily trading playbook that triggered paid us. Okay, so we had very nice plays in here that almost all of them paid. Over 90% of the setups paid us. And right now it's time to pull back the throttle. Do not be aggressive. We are pretty much at all-time highs and closing below that 10-day moving average in no trend. When we go into no trend, my number one priority becomes preservation of capital and protecting my profits. I'm not trying to press long. I'm not trying to pick a bottom or buy a dip. Those come at other levels that we'll discuss in later videos. But right now, the number one priority for me is preservation of capital because we did close in no trend. No trend presents low odd trading probabilities. All right. I like to capitalize on momentum and trend. That's what my system relies on. And right now we entered no trend, which means pull back the throttle, peel off some runners from your previous trades, and sit on your hands and have some patience until the next uptrend. It's really that simple. Right now, until we can get above this candle's high on the SPY, which was 364.38, until we can get back above that, this is looking like a failed breakout. You can see we had the previous high back here, and then we gapped above on vaccine news and kind of just sold off all day, and we were never able to reclaim this level. So until we can get back above this level, I'm extremely cautious. So on the daily time frame, we're in no trend, and we're starting to see divergences across the board, which presents some difficult trading. Until we can get all of the indexes moving in the same direction consistently, it's going to be very difficult to trade this market, and it's really going to be a market of stocks and stock picking as opposed to the index. Now, one thing that I'm keeping a very close eye on is the NASDAQ. The NASDAQ actually never got back above this previous all-time high on the vaccine news. So this was the vaccine news, and we never got back above this all-time high. So once again, until we can get back above this all-time high on the Qs, I'm cautious. And another thing that I definitely want to point out is this weekly time frame chart. Now, the reason that this is important is because we have a bearish MACD. All right, so when this MACD, what this measures is momentum. And on a weekly time frame, which is a higher probability time frame if you're a swing trader, this weekly time frame is showing us the momentum has slowed down. And I've been preaching all week, especially later in the week, that we're getting a little long in the tooth in this 12-day uptrend, and it's not time to be pressing long because we're losing momentum fast. Now, until we can get this MACD to curl back up and get a MACD bull cross, I'm cautious. I'm very, very cautious. So on the S&P 500, we have no trend on the daily time frame, which to me in my trading system signals moving to cash. And then on the weekly time frame, which is a higher time frame, which typically provides higher probabilities if you're reading the trends, on the weekly time frame on the NASDAQ, which is what I prefer to trade, on the NASDAQ, we actually have bearish divergence, which means that MACD is sloping lower and price just kind of floats around. Okay, so what this presents is an opportunity for some shorts to set up. Now, I'm not a huge fan of shorting bull markets. It's very difficult. You're essentially trading against the flow of capital and the flow of money over the grander term. So I am going to be sitting on my hands and waiting for the next uptrend to occur on the S&P. So until the S&P and the NASDAQ can get on the same page, I am going to be very, very cautious. Now, I understand that we do have, what they call the Santa Claus rally or bullish seasonality, and that's great to have a thesis, but we don't trade with opinions. We trade with price. And right now, price is telling me that we're in no trend. We have bearish divergence on the higher time frames on the NASDAQ, which is really the big momentum index, and one that I really love to trade. And so that tells me that regardless of whatever anybody thinks or what the news says or anything like that, regardless of that, we have to respect price. And right now, price is telling me that it's probably a very smart move to be pulling back the throttle and peeling off some of our previous winning trades from this 12-day uptrend. And just to mention, we have a premium members subscription, and every morning I send out the daily trading playbook with the highest probability trade setups that I can find in the market, along with other market commentary, as well as my personal investment portfolio, how I'm invested in the stock market long term with key levels. And from that daily trading playbook, every single trade that was on there that triggered paid us. So if it didn't trigger, you never took the trade. And if you took the trade, it paid you. So you have no excuses to not make money in this uptrend. And right now we are closing in no trend. So we're going to be pulling back the throttle. We're going to be having less trade setups and potentially even some short setups. Now, for me in my personal trading profile, I don't like to short bull markets, like I said, and I personally won't be taking any of those short setups because in my strategy, I trade the uptrends in bull markets. I trade this uptrend, I trade this uptrend, I trade this uptrend. It's a lot easier to trade the uptrends in bull markets with the stocks that are showing relative strength. And until we can get back above, once again, this 10 SMA and ideally back above that all-time high, I'm going to be extremely cautious with my trades that I have. So hope you guys enjoyed this video. Hope it gave you some insight into what I'm looking at this next week. And if you like this, make sure you go ahead and hit that like and subscribe, and also click the links in the description. See you soon.